What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update for you guys. So what we're going to go over in this video is the massive catalyst that we have coming up for AMC this week and what I am expecting to see out of the share price and how the share price is going to react to having this event this week. Now, we pretty much all know that this event is coming and that there is going to be a lot of volatility coming into this next week. Now, something else that I really want to touch upon is that the DTCC has been submitting a lot of these requests for proposed rule changes, and now we just received that a notification that one of these proposed rule changes is going to be effective immediately. So we're going to go over all of the details of this new rule change and how it is going to affect AMC in the future. So we have a lot to cover in this video, and I'm going to do my best to explain all of this information to you guys as simply as possible. So before we get into all of that, if you guys would like to earn 2 free stocks with Webull valued up to $1,850, make sure you check out that link down below in my description. All you have to do is sign up for an account, deposit over $100, and you get access to those 2 free stocks. And if you guys enjoyed the information and analysis that I provide for you in these videos, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So AMC had a pretty solid week last week. We did see it rally up pretty substantially into this $12 range, but then towards the back end of the week, we did see AMC fall. Now, it is a very good sign that we did see AMC close above this $10 price point on Friday. It's a great psychological level, and the fact that we saw such a battle for this $10 price point really suggests to me that the hedge funds are actively pushing to get AMC below this $10 price point. So when we move over here, this is going to be the big catalyst that I only want to briefly touch upon. So AMC Entertainment Holdings, the largest theatrical exhibition company in the world, announced today that it will report its results for the first quarter ended March 31st, 2021, after the market closes on Thursday, May 6th. Now, because of this, I do think the hedge funds are going to come out in full force this week with their manipulative tactics, but I want you guys to understand and try to grasp the fact that earnings, in my opinion, is not the end-all be-all for the short squeeze that we have ahead of us. Are good comments that come out in this earnings call a good sign for the company over the long term fundamentally? Absolutely, but the fact that retail owns a significant amount of the AMC shares, and we have a really good understanding of how the hedge funds have been manipulating the share price of AMC and overshorting this stock, I don't think that we really need to freak out about any manipulation that we see this week or any bad earnings if that is what happens. Now, I also think that the different news platforms such as MarketWatch, MarketBeat, and a couple of these other different companies are going to come out with hit piece articles this week. Again, pay them no mind. We know what we're here for, but again, none of this is financial advice. This is for educational and entertainment purposes only, but we know what our purpose is. We have the winning hand at the current time, and this is our battle to lose. So now we're going to get into how the DTC is working to actually expose a lot of this manipulation going on, or just trying to figure out exactly what is going on with all of these different overshorting situations. Now, before we get into this, the actual SEC document that we are going to be reading is a little bit confusing, and I don't want you guys just sitting here watching this video confused about what this is exactly saying. So essentially, the gist of it is going to be is they want their members to be paying their debts in the correct amount, and they want to be able to track exactly what is going on between their members. So now when we come over here, this is going to be SR DTC 2021-007. So we can see right here, pursuant to Section 19B1 of the Securities and Exchange Act of 1934 and Rule 19B4 thereunder, notice is hereby given that on April 20th, 2021, and as we can see here, this was from April 30th, 2021, the Depository Trust Company, DTC, filed with the Securities and Exchange Commission the proposed rule change as described in items 1, 2, and 3 below, which items have been prepared by the clearing agency. DTC filed the proposed rule change pursuant to this section and this rule. The Commission is publishing this notice to solicit comments on the proposed rule change from interested persons. And when we come up here, self-regulatory organizations, the Depository Trust Company, notice of filing an immediate limit effectiveness of a proposed rule change to update the DTC Corporate Actions Distribution Service Guide. So when we come down a little bit further, we can see that in its filing with the Commission, the clearing agency included statements concerning the purpose of and basis for the proposed rule change and discussed any comments it received on the proposed rule change. The text of these statements may be examined at the places specified in item 4 below. The clearing agency has prepared summaries set forth in sections A, B, and C below of the most significant aspects of such statements. So the proposed rule change would update the DTC Corporate Actions Distribution Service Guide to 1. Direct participants to use the DTC's Claim Connect service instead of DTC's Adjustment Payment Order APO service to make manual participant-to-participant cash adjustment claims to principal and interest payments on stock loan and repurchase agreement positions and correct a misspelled word in the distributions guide. So here we can see currently the APO service is used, among other things, to make manual adjustments. A manual adjustment is one that is initiated by one of the parties to a stock loan or repo repurchase agreement against the other party, as compared to an automated adjustment made directly by the DTC. A manual adjustment can be necessary where, for example, there is a transaction discrepancy with the stock loan or repo, or an agreement between the parties provides for an adjustment unknown to the DTC. So the parties can settle the adjustment away from the DTC, or one of the parties can submit a manual adjustment via the APO service. Unfortunately, manual processing of the, adjustments via the APO service is subject to a number of shortcomings. For example, the adjustments are not subject to DTC's risk controls. This is not something that they want to be engaging in if they cannot be gauging the risk of these different transactions, which can unexpectedly subject the receiving party to the value of the adjustment. So one person can come in and make an adjustment that is directly going to affect the other party of the transaction. They lack a unique identifier, which can make reconciling claims difficult. This is going to be very important later in this video when we go over something slightly different but also very related. So participants need to actively monitor for manual adjustments. There is no dashboard where participants can see all of their adjustments, nor is there reporting or search capabilities on adjustments. Only one party to the stock loan or repo can submit a manual adjustment at a time, and there is not a validation or matching process, which means the parties often need to submit multiple adjustments between each other before reaching a final agreement. To address these shortcomings and others, the DTC proposes to no longer allow participants to use the APO service to make these manual adjustments. Instead, participants would be directed to use this Claim Connect service in order to continue to make manual adjustments through the DTC. So this is going to be a very important part right here. Claim Connect was established in 2020 as an optional DTC service that enables participants to bilaterally match and settle cash claim transactions through DTC. More specifically, Claim Connect is a validation and matching engine that continually monitors claims throughout their life cycle in order to settle and close those claims through DTC's settlement process. Now, again, like I said before, this is kind of a tough filing to get through. It's kind of confusing. So let's move on to this other Reddit thread right here where we can take a little bit of a broader look at exactly what is going on and tie this back into AMC. So shout out to Just Being Punny. I've used a couple of his Reddit posts in my previous videos. They're all great. So make sure you guys go give an upvote to this post on Reddit. So when we come down here, we're going to go over this naked shorting section and below. This is a different beast altogether, because I would not be actually borrowing the stock. I am not paying fees or any of that nonsense. When stocks are hard to borrow, I can engage in a naked short. I can sell a stock I don't have with the promise on delivering said stock to the buyer by the settlement date. If I don't get you the stock by then, it's a failure to deliver. So, we've been over this a little bit in my previous AMC videos, and when we come over here, we're going to take a brief look at this again, and first, we're going to take a look at this right here. So the figure that is represented in the failed to deliver numbers is not a daily amount of fails, but a combined figure that includes both new fails on the reporting day as well as existing fails. In other words, these numbers reflect aggregate fails as of a specific point in time and may have little or no relationship to yesterday's aggregate fails. So it is essentially a total number. And when we switch over here, this is going to be AMC's most recent failure to deliver number. So we can see here that on April 13th through April 14th, there was an additional about 2.3 million shares that were failed to deliver. So now what's important about this date right here that I want you guys to look at is that when we come over back to the chart of AMC, so on the 13th and the 14th, we can see the 13th, AMC was trading at around $8.79. Then on the 14th, when all of these fails were reported, the stock jumped all the way up into the upper $9 range. So that is going to be something that we need to keep a lookout for to see if there is an actual correlation between the amount of shares being failed to deliver and the share price of AMC. Now, when we move back to this Reddit thread, let's get into how this all ties into the 007 DTC ruling. So when we come down a little bit further, the DTCC, the DTC, and the NSCC, how do these people operate? So the DTCC is the big boy. They are responsible for providing clearing, settlement, and information services for equities and other securities traded on U.S. financial markets. One of its key roles is to reduce counterparty risk by guaranteeing obligations will be fulfilled. So there are two subsidiaries of the DTCC, the DTC and the NSCC. So the NSCC, these are the people that make sure everything clears all good and well and make sure everything is settled on the dates it should be. They also streamline the entire process by netting. They figure out everything I owe you and everything you owe me and boil it down to a single payment. So it's not actually a single payment, but you get the point. It reduces the constant back and forth of payments and securities exchange. So say you and I entered into a couple of different trades, and the NSCC would look at this net settlement and see, well, if we have 4 trades over here where I'm up $100 on this trade versus your position, and you're up $50 on your trades in total on this other position, then we would have a net balance that I would then owe you or you would then owe me. When we look down a little bit further, the DTC, now these are the people who are responsible for transferring stock ownership, usually by making electronic book entry changes to reflect the NSCC's net settlements, as well as transferring money between participants. So the DTC is the bookkeeper. They make the actual transfer from each account to reflect what the NSCC is showing. And as we saw in the proposed rule change, the 007, they actually are having a tough time doing this right now, and they want to make it more accurate. The DTC also has some cash in the bank, usually a few $billions for in case someone is naughty and can't settle their trade. This consists of a participants fund, a pot of cash that everyone contributes to, a line of credit, just an amount they can borrow from the bank. Now, here is where I want to tie this into something that we have also talked about on this channel. The NSC also has a participant fund that it holds as collateral to cover losses from participant defaults. This serves as a form of mutualized default risk sharing. Now, when we come over to this new NSCC rule, sorry, I'm saying NSCC and DTCC all that so much in this video. I'm honestly annoyed with myself as well, so I apologize for that. So we can see that the NSCC's review of the requirements of other clearing agencies and foreign CCPs indicated that NSCC's minimum required fund deposit requirement of $10,000 was significantly lower than minimum deposits or equivalent required by other such entities, and this is why they want to raise this margin requirement all the way up to $250,000 per member. Now, there is about 3,440 members, so this is going to be a very significant increase to the actual margin that the members are going to have to put up in aggregate to the NSCC. So it's not that much for the institutions individually, but overall, this money is going to add up. So now let's tie this all in together and connect everything that we have talked about in this video and tie it into AMC as well. So I know this might have been a more complex video and it might have been a little bit harder to see and follow my train of thought versus some of my other videos, but here is what I am thinking. So in order to kind of look at these proposed rule changes, we have to look at them as a whole because they all play off each other. So the first rule change that we went over in this video, the 007, essentially what they are doing is saying, hey, we need all of our members to be operating under one system so that everybody knows who they owe, when they owe them, and in what amount. Essentially what that is doing is providing transparency. Now, we are also seeing the NSCC over here trying to increase the actual margin requirement in the deposit amount to $250,000. And as I said before, this amount is going to add up because there's 3,400 members in the NSCC. So really what they are looking at right here is trying to create a more transparent marketplace within all of their members. Now, what this is going to do, it might serve to kind of handcuff the hedge funds in some way because they are not going to be able to do a lot of these shady tactics anymore, especially when we get a lot of these rules into effect. So that was the main purpose of this video. So I hope you guys were able to understand that, but if not, make sure you guys drop a comment down below and I will do my best to answer all of your questions. So that is going to conclude this update for AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.